Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the gold market. So in today's weekly report we have discussed two factors that by our opinion are the major ones for performance in gold market, as in short term as in long term. In short term we suggest that gold market mostly has completed the local destination points. So to start next extension in a big scale, it needs more punch, it needs more significant driving factors that could appear in the perspective of the 6-8 months. And this time they will be probably not some kind of the geopolitical tariffs kind of issues, but they will be based on economic conditions in the United States. We suggest that it really might be the quantitative easing starting in the perspective of the year, just by looking on the statistics that we have from the United States, by the resistance that shows Japan, Vietnam, China in relation to tariffs and pressure that the United States is trying to make on these countries. So taking it all together, so in some nearest few months, the pullback on the gold market is quite possible, especially if all initiatives that Donald Trump started will show at least some results. I mean, the peacemaking in Ukraine, tariffs, fruits, so what it will be the earnings for a budget, maybe some inner destinations will be achieved, so on the domestic political arena and something of that kind. But later, since the overall situation in the United States economy is deteriorating, the quantitative easing seems mostly unavoidable, and that's the things that makes us expect the rally continuation on the gold. Consequently, in the long term, our strategy remains the same. We are watching for dips that might be formed here and suggest the accumulation of the gold positions for investing purposes. Of course, for trading purposes, will be different directions, different steps. We're not restricted in some one direction, but for investing purposes, for the strategy for investing with the money, we're still looking on the bullish side. Now, if we turn back to the local situation, here what we have now lots of different talks stand about the retracement as well, and some traders point on some particular bearish patterns on high time frames. But we are not hurry up with this conclusion, and mostly because of the picture that we see here. As we discussed, it's already on Friday, but on Friday it was not definite yet. Since this trading still was in progress, currently we could say definitely that grabber has been confirmed. So we have the bullish grabber stands in place with the almost touching of the daily average sold and near the fib support around 33 or even 32.50, so somewhere between these two levels. So we have this pullback. If you check this on the futures, you could see it also on April futures. This is the same pattern on the gold. So this is reliable pattern, and definitely we should not ignore it in the current circumstances. What does it mean? It means that with the grabber in place, currently you could consider only long trades, only bullish trades, until grabber will work out. So I suppose that it might be at least action above its stop here, somewhere to the maybe 33.80 area, 33.90, or potentially in the most positive way, it might be retesting of the top, action back to the 35. It's also possible. Or the failure of the pattern. So in this case, market has to drop below the lows. But the problem with the second scenario is that oversold action, oversold area. So if you even aimed on possible taking in the short position, your potential for a trade will be very small, and it will be a bit really difficult and some kind of the challenge to manage this position in an area of the oversold, so around 3250 probably. That might be the pointed as the destination point or as a floor for the coming week. So that is what we have. By looking at lower time frames, actually the only chart that we need here is hourly, and you can see what is going on here. So market has failed to form our hand shorts and proceed higher, but at the same time you can see that it stopped somewhere around the previous lows. That is happening around the confluence support. You can see on the 4 time frame chart it mostly stands in the same area, and start moving forward to the upside. Here's also some divergence have appeared. So if you would like to take position with the grabber, and in general you're considering taking a long position, all you need to do is that use this upward action, trying to position as close to the lows as possible, but the stops below this area and below the grabber. So if bullish scenario starts working as it should, market should not drop lower and just should keep going higher. That's what we have on the long side. On the short side, not too much options. You have first is to wait when the grabber will be worked out, as I said. So it might be either the action, as we said, around 3380, 3390 area at least, or even higher back to the top. Whatever upward action will happen, then you will have to once again take a look, the fresh look, to make a fresh look on the market and see what the patterns might be forming or something. Maybe we will get kind of the guardrails to put to sell, right? If we'll get here extended ABCD1618 extension, that's also possible. Or you could use, for example, stop sell orders around 3265, 66 area near the lows. In this case, if market somehow will break it down and grabber will be raised, you could step in on the using stop entry order. But as I said, your potential will be rather small. So here is 3265, 3250 is already supported and oversold. So it will be really difficult to manage the position in this area because volatility could rise since the new support will appear around these levels, and it might be a really choppy performance, which will be not really the pleasure to deal with. So, but this, if it's okay to you, so you probably could think about this. But my personal opinion is that it would be better to not trying to trade against the daily grabber that we have. It would be better to wait when it will be over, either on a positive sign or it will maybe fail, but some final result with this we should get. Then it would be much easier and better to trying to start searching for maybe some other patterns and some trading steps.